Okay, we are live now. Okay, let's begin.
Yep.
Okay, hi everyone. Thank you for joining us here today and welcome to today's masterclass on how to raise capital as an early stage climate tech startup. So this is one masterclass out of a series of them that we'll be having over the course of the entire week. And we've put together this set of masterclasses as part of the Avaana-Startup India Grand Challenge for Climate Tech Innovation. So this challenge aims to identify and support entrepreneurs building in climate tech across 7 themes: energy, food, circular economy, industrial decarbonization, climate finance, climate data, and carbon capture. So if you haven't applied for the challenge already, we encourage you to do so right away. For today, the masterclass will be hosted by Swapna Gupta, partner at Avaana Climate and Sustainability Fund. The structure of the masterclass will be as follows. Swapna will talk about the topic for about 30 minutes or so, and then we will take questions. So if you have any questions, please feel free to drop them in the chat, and we will address them at the end of the talk. I hope you have a lovely time, and over to you, Swapna.
Thanks, Ishita. And it's great to have this ecosystem come together as we are all building for climate tech. But I think one of the important parts where a lot of founders reach out to us, we are an early stage at Avaana, early stage climate tech VC, come in early, work alongside founders and build with them in the climate tech space. We, of course, see a lot of deals. We end up doing few of them. We do get questions from entrepreneurs. What are the kind of companies that typical climate tech VCs raise? Looking at how do we really raise capital in this space, which are all pertinent questions. So we thought maybe we'll use this opportunity to deep dive and help everyone understand how do you go about your journey of entrepreneurship, which has many, many milestones. But an important milestone is also fundraising in your journey. So how to navigate that. Given the 30 minutes, I thought to keep it interactive, but also I put together a short deck. So I'm going to use that as pointers to help us discuss what does it mean to raise capital as an early stage climate tech startup. Quickly as a background, I've been a VC in Indian ecosystem for more than a decade. Most of it being spent in deep tech ecosystem, and which now, I mean, deep tech has different definitions. So does climate tech, but the idea is how do you really build for startup ecosystem to foster and grow the innovation forward, whichever sector you're really building for. And as we think about climate tech, I mean, and I look back at my journey as a VC and how the ecosystem has really sort of exploded, if you will. When I started my journey, and that makes me dated, there were zero unicorns to speak for, right? Today we have 100, 150 plus, whatever the latest number is. And unicorns doesn't mean anything, but it just gives you to show that the scale of the startup ecosystem. But a lot of it is on back of digital innovation. Now, if you think about any ecosystem, startups became fancy because of digital innovation, but startups have always been there. What do you call today as Tata, Birla, Ambani were all startups at some point of time, right? But again, it is a function of how those journeys have been, and innovation continues to because of the technology amplification and shorter innovation cycles. The first wave, as you can see on the slides, were really industries which have become now the bane of our ecosystem to climate, which is hard to abate industries, be it rail, steel. But also we started innovating on clean tech, be it water and other renewable sources of energy. Soon the world moves towards automotive, where you had IC engine, now we are talking EV to take care of course, movement and mobility, but also to solve for climate. We got petrochemical aviation. Now we're thinking about how to solve for petrochemical and aviation while we need to commute, but how do we take out petrochemicals, right? And the last wave, really, which was the shortest wave, was digital innovation, which really built the India of today. And then as we think about the current wave, which is ongoing, what is really the future? Future is what we see in all those science fiction books and movies, which is about AI and IoT and robotics. But it's also about having a planet to live. There is no planet B. And as you think about it, climate science is the new computer science. And the reason I say it is that a lot of digital innovations which have built the establishment or foundation of the country today, we know this will be used to now create the future on the back of bio innovation, physics innovation, chemistry, new materials, new hardware. and we need to focus across. And that's where entrepreneurs need to think about. This is a new breed, even for entrepreneurs, even for investors. How, as a climate tech startup, I am able to raise capital for these innovations which are starting today. And the reason I say it is starting today, there is a Jefferies analyst report which says that 75% of climate tech technologies which will solve for the future have not even started today. So that's the power of startups which are going to get built from today, which means you need ample capital to continue to support that journey. Some data here, again, we often get founders asking us, is there a certain founder archetype, which is what you're looking for as you're raising capital, right? And the reason I put there is for everyone to understand and assimilate, there is no founder archetype, but given you're building for a very technical domain, you do see folks who have some prior background in climate science or some engineering degree or some business degree to understand how to build, because they're actually taking massive problems which can move the needle forward. But also you need a domain experience to take it forward. I don't think one thing is here, but what also we are seeing, given climate is crucial across three key sectors, which are 90% of India's emission: agriculture and sustainable food systems, mobility and supply chains, and energy transition. These are 90% emission, but also 70% of GDP, large sectors. So there's also an industry expertise which is important. If you have worked for a large cement industry, you can actually know what it takes to build green cement, right? Or if being part of the energy transition, you know what it means about thinking about green hydrogen. So a lot of industry experience is also becoming critical and crucial. This just shows to the massive scale the ecosystem has grown. If you think of the deal count, it has grown massively in last 8 to 10 quarters. And if you think about quarter 3 of 23, you see a record funding environment while the deal volume dropping. This also shows that companies have started scaling now and are ready for their next growth phase and starting to get growth capital. So that is really the potential and power if you are able to scale companies of the funding environment. So anybody who tells there is no money available for climate tech, there is, but you need to scale and get out there. Typically, most founders who are raising capital go through their own valley of death. There are multiple reasons why you're not able to raise capital and you're not able to scale your startup. So as you're building for your startup, rather than thinking about I'm not getting the funding, you should think about how do you build your businesses where you are able to raise capital. The key reasons why most startups are not able to raise has been typically there's been no market need, you've run out of cash, you don't have the right team, sometimes competition takes on, and different things. But in contours have also changed as we think about climate tech. There are three key things which we have seen which typically help most startups succeed is the kind of team, domain experience, science experience, ability to manage finances. The reason I say that is a lot of these climate tech startups actually have slightly longer gestation period because you are doing both, sometimes process innovation, sometimes product innovation. You need to have an eye on the P&L, which means you don't want to run out of the cash. Market need, I think most startups which are starting in climate tech typically are aware of why they're building, so they want to take on ambitious projects, right? They want to think about next built environment problem. They want to think about next alternative materials. They want to think about next green cement company or a green hydrogen company. But I've also seen founders who will come and say, I will do alternative protein. You have to understand market need, that is India ready for a impossible burger? Maybe it's not, right? So that's the market need part. The third is a tech. Is your company have the right tech chops to be not outcompeted and continue to have a tech mode? Because a lot of this will be about tech innovation as much as about product market fit. So you have to think about tech fit as well as product market fit. And those contours are changing. And these are some of the things that you keep in mind as you start out, will help you succeed in your journey of an entrepreneurship, in your journey of growing and scaling your company. The next key part is fine. I have figured out my product market fit. I figured tech market fit. I've built the right dream team to build this. And I know how to manage a business. I know the business models. What do I do next? Of course, you need to raise capital, but you also need to be cognizant of where are these various forms of capital. Let's start with the life cycle of any climate tech company. Let's pick up, say, an alternative material company, right? There is this thought process, I'm building something. A good place to start is research labs. Maybe I can use some of the, and there is now BIRAC, there is CCAM, where I can, for cheap, use the resources, not build my own resources and start this journey. As you start in this journey, you start wanting to do your first POCs, you get your first LOI, Can I get that grant access to 100 to 300K, whatever that company means, right? And get that first POC going, first proof of concept out there. As I do this, I need to scale, I need to raise equity. Get to angels who are focused on climate. There is a massive inflow of capital of folks who want to invest in this space, and there is 100 to 500K easily put together, can be done. Let me go there. As you start scaling, you're somewhere close to break even. I would change the slide slightly because value of death in this business is much more than the normal businesses. So probably it actually stays till you raise large VCs. Can I get a smaller early stage VC who actually can put the first check, help me scale, grow, be my partner in my journey, and then help me with later stage VC rounds? And at some point, then you move to a place where you say, a lot of this is grown, scale. Maybe it's time for strategic alliances. Maybe I need to get that P. Maybe I need to be a buyout. Maybe it needs to get strategic capital. And that is a journey that as a climate tech startups you need to do. So I think starting from a point that there's no capital available, no, there is. Depends on the stage you are, how you underwrite the risk, how are you scaling, and why do you need that capital. If you're clear and you're able to get to those milestones, sooner or later capital will be made available. And the last, blended finance, which got somewhere blended in this, is you need to think about equity, yes, but there's enough massive pools of capital which you can access across the world from foundations, philanthropies, DFIs, and you need to think about that, at what point should I activate these channels as to scale my companies. As an early stage climate company, you should think about, as you chart the course of your company, the milestones, but also your funding journey, because it will be as crucial to scale as will be the milestones. You can bootstrap, of course, but in some cases the R&D is so deep that you may not be able to bootstrap. Then you need to think about it. Sometimes you're doing a good material science company which may not need a lot of lab resources, but at some point when you think you want to grow 3x, 4x, maybe you need that capital, right? So think about the right points of intervention and right capital pools. Not every capital is equal. Money is the same color, but every money comes with a different insight and know-how. So think about where that capital is coming for and from, and how it will help you. As we move forward, while we were having these conversations and as we showed different personas of capital pools, right? You need to, of course, get that pool, but given we are talking about early stage VC and given I have the VC hat, let me share with you, how should you approach a VC? There are ample capital pools. India is much broad in terms of its capital markets. Also now we just became the third largest, overtook Hong Kong. So there is enough and ample liquidity, and there is enough financial capital available. Now, as you think about it, who is the VC I should partner with? As I'm thinking, I've done my seed, I've done my angel round. Now is the time when I'm looking for that 1, 2, 3, 5 million. You should think about VCs in different lenses. One is this VC who's able to support me financially in the long term? The reason I say long term, it's very important because there'll be enough and more value of debt situations, especially because we will have climate tech startups both doing process and product innovation. It's no more, I guess, 2020, where you will be able to have uh, enough and more capital just coming your way and chasing deals, right? You will have to have patience, you'll have to have perseverance. So, is there financial capacity for long term support? When this fund is writing, for every dollar it is underwriting, is it writing another dollar? Is it underwriting another $2, right? For us at Avaana, I can tell you that for every dollar we write, we keep aside another dollar to be invested over the lifetime of the company, or $2, right? So that is a philosophy we go with. So every fund has a different philosophy. You need to think about it. If the value of that scenario approaches, uh, can I work with these guys? Will these guys be there? The second is reputation of the firm. No questions asked, right? Any incoming VCs, any partner, any top hiree who's going to join you is going to talk about your cap table. Your cap table has to be clean. It has to be the best in class people you want to work with. Look up the firm, look up the partners, look up their backgrounds, look up the kind of portfolio they have, and anchor much more on reputation of the firm. The reason I say is, again, capital is available. If you want to raise 1 to 3 million, you will find enough number of pots. You need to choose which pot to take the capital from. The next and the most critical point, actually, this should be the only thing on this slide, is understanding of the space. Now, climate is a new, nascent, upcoming, very vibrant area. But again, understanding is limited, right? So today, if I talk about us at Avaana, We see probably 1,000 climate tech deals a year. We over time have a strong understanding of what takes to succeed in climate in a certain space. What does a climate tech startup look like? What's happening globally? What does a growth curve look like? But there are also other VCs who also do climate. The challenge with also doing climate is uh, you don't want to be just another company in their portfolio, but you want to be the company in their portfolio, which means they understand the space, they understand how the growth in this space will look like, they understand what kind of founders will build which company, what kind of companies will be built here, what is the 10-year hence horizon on this company. While none of us have the crystal ball, but really, is there some way of thinking of how this company will grow, right? Which means it has to be a good chemistry between the incoming fund and the startup to understand the vision. And that is why it's very crucial. The next is strategic support. I can't make it clear enough that at the early stage of any startup journey, there is a founder, there's a founding team, there are few early employees, but you also need a VC who's a call away, who actually doesn't show up just on board meetings, but is actually able to work with you, be it your financial model, be it your hiring, be it your first industrial GTM connect, be it helping you work with various bodies across the ecosystem, be it helping you blended financing, which is why what you also need to look at is what does the net network of a firm look like? Are they, if you think about climate tech is very, very different from most other innovation curves where we have seen, because there are four crucial ecosystems. There's a technology, which is very crucial out of research labs, out of incubation centers, out of people's garage. There is also the industrial connect part, right? For every company that is being built, they need the GTM, they need the sandboxing, they need the market linkages. Can this firm help me? There's also the big policy part. If you think about clean tech 1.0 or 2.0, however you like to coin them for India, first wave was really solar, second was EV. A lot of it was the movement of policy, regulatory, academia coming together. Are these guys able to stitch together? If you think about India, there was ONDC movement, there was UPI movement. Now there is UEI movement, which is Unified Electrical Interface. Is there something happening there where we can get clued in? So you have to work with people who actually can basically open their Rolodexes and help you navigate, be it capital, be it policy, be it academia, be it industry. And that's why it's similar to marriage, that how do your skill sets and the fund skill set marry each other, and how are you able to work in tandem with each other's strength. The last part really is how do you think about the pitch deck? So I have identified the problem statement. I've identified when do I need capital. I've identified the VC I want to work with. Now there is that first shot you get with that VC. I'm not saying one and only shot, because you get many shots with various VCs, because again, what stage you are in, you might be there in 3 months at a place where the VC is ready to invest. The outcome you really want from a VC conversation is a term sheet, right? You want to work with that VC, hence you approach them and you want to raise capital. What does a VC want to see? When you want me to put money in you, I want to know what you're building. I want to know, since I'm a climate tech fund, very razor sharp focused on climate, the kind of impact you can bring in terms of climate, be it emissions, be it supply chain mitigation, be it in agri adaptation or various frameworks. What is the impact you're creating on ground? The third is, if this is a value proposition, this is the ability, are you able to grow? What is a growth roadmap? What does it look like, the scale journey of this company? And of course, then is the capital. You might come to me with a plan which says, I want to build a hydrogen electrolyzer company and I need 50 million. Now, there is a VC for that, but it will vary with every fund. So, curate accordingly. It's a very deep and focused area. You should know who you should talk to. For example, if you are building an alternative proteins company, maybe there is that one fund across the world which just does alternative protein, right? And you reach out to that fund while you reach out to others, right? But you have to curate very specifically. Similarly, when you're looking at doing a large scale infra project, which is in clean tech, maybe putting together a new plant for solar panels. You have to think about which kind of fund am I going to, what is their expectation, what is my pitch. So it's very important to curate what is the VC looking at, what is the output they want to see, and hence this is what my pitch deck looks for, that because it's very has to be very clear in that conversation what you want versus what that VC wants. There is a chemistry, there is a synergy in how the startup is going to scale. So the hence you have to have a This is like the storyboard, which has to be crisp, has to be short, has to be nail biting, has to be heavy hitting. But it's really, why did you start? What are you building? What is the problem? How are you building? What is the large opportunity? What makes it differentiated? Is it a blue ocean? Is it a red ocean? What have you really succeeded in building as a product? Where are you in a journey? How do you make money? Again, a lot of folks think I have a great idea and that's good enough to raise money. Well, it is at certain points. So whether you're raising angels or friends around, it is who they put money on, you as a person, right? But as you grow and you want to rate early stage VC, things change because as a VC, for example, at Avaana, my fiduciary responsibility is to multiply the capital and return back to my LPs, which means I want to see a business model. You have a great idea, you have a great product, you have a great company. Will you make money? Will you be able to monetize this? How will you scale it? Then, of course, who are the people behind it? Again, it will be very strange that you come and tell me that I want to build a, again, let's pick green hydrogen, right? For argument's sake, I want to build a green hydrogen electrolyzer company while for last 30 years you were building a marketing agency, right? So I think it's very important to have the right team and showcase what are the complementary skill strengths of the team, how committed they are, what have they done in the past, and what makes you the most suited to solve that problem. And then, of course, like I said, financials are important at early stage VC because I, as a VC, have a fiduciary responsibility to my LPs, limited partners, to multiply that capital. How will this business grow? What kind of capital is needed? How will it score? In summary, I will tell you, and I still told this to someone else. If at the end of the day, and the reason I say is as a VC, we are overwhelmed with that information, right? Maybe it's me or someone else. There are thousands of emails in the inbox. You're responding to all of them. You're listening to maybe three, four, five pitches sometimes a day, right? With that overwhelming information, are you able to leave that aha moment? But at least for me, for example, am I thinking about the company as I'm having my dinner and I'm actually telling my son that I met this interesting company which is doing this beautiful thing, right? So you have to build that impression. Again, I'm not saying first impressions are the last impressions. You probably will get another chance. But when you get your first meeting, this is your chance to build that story right and build that impression of what you're building and communicate your story right. Sometimes I feel that founders have a great story, have a great idea, probably a $1 billion idea, but they're not able to communicate well, which is why you need to have a very crisp, concise flow to communicate your idea and your journey. Typically, a journey looks like following. You will get a call. I suggest to most founders, again, it is just the volumes and the enormity of what a VC deals with in their inboxes, WhatsApp, and messages of the number of companies they're meeting. Good to have a warm connection versus a cold connection. Good to have a quick elevator pitch as you send that email out, and then you will get that first founder call. The first founder call is basically hygiene check, right? Do we like the team? Do we like the idea that they're building? Do we like the climate angle, right? And then it comes about peeling the layers. It is about building conviction. Then you will get to spend more time with investors. You will understand investors more. Investors will understand you. And there will be diligence, and of course, you get to term sheet. Sometimes these can be as short as 1 day, 5 days, 15 days, 30 days, could take 6 months, right? Every founder will have a different journey depending on what they are building for. For example, there might be a company which I am convinced it will get built, right? And I might have seen 30 odd companies. And I see the 31st company, I know this will work. I'll probably work with it on the next day, right? And there might be a space where I've seen 30 companies, I meet the 31st company. I still don't have conviction, but there is something about this founder I like. So then I'll again start spending more time on diligencing on the space. Maybe I was wrong. Maybe this is large enough. Maybe the founder is right. So sometimes we will also as VCs question our prejudices. So these timelines vary a lot. VC to VC, company to company. But once you are in the conversation, give it your full heart and soul to convert it. Again, because this capital will help you grow, and this is also helping you understand your company better as to what are the things you are building for. Again, summarizing everything, do your homework, know your customers. There are no two ways about it. You should know about your company, you should know about the VC you're talking to. some of the things which are non-negotiable, right? Which is where lot often we often cut the call very soon and shortly is we know that we are wasting time of the founder when we understand that the founder has this great idea but doesn't understand the market. Sometimes there is a great idea, but founder doesn't even know how he will make money in next 15 to 20 years, right? So then unclear business model. We need to make money as investors. Again, very important that you think about how you do it and have it part of pitch deck. Again, roadmaps. Again, I agree. Early stage companies, you will have pivots. There will be a lot of meandering, things will change dynamically, macro might change. But it's non-negotiable when a founder comes with and he says, I don't know. I just know this is how next 1 year will look, right? You need to know what you're building for. What is the long-term vision? Again, basic finance is super critical. If you don't understand your business unit economics and expect me to, not happening. Again, if you're in diligence, you're working with an investor, have commitment, have timelines. Nobody likes waiting on each other. Be honest. Avoid greenwashing. The reason I say is climate is a space where impact is super critical. Don't try and put a facade to anything as a climate, but actually have real climate impact. That's when you go to a climate VC. Otherwise, go to a generalist VC. And the last is dishonesty and exaggeration. The reason I say is we have had so many scenarios now before earlier lives is walking away if we find the founder's been lying or cheating, right? So let's not come to that situation. We should be honest across the conversation, also not exaggerate. The reason I say is this world is very, very transparent. Everyone knows everyone. 2 phone calls away, everything is as crystal clear as it can be, right? So this is your who you are on a slide. Be as honest what you're building, where you are, how you're going to build, because it's very easy to peel those layers. So those are the things as you think about raising your VC capital, as you think about early stage VC climate tech, and as you think about growing. I'll stop sharing here because I would love to also address questions, Ishita, if there are folks who want to understand some of these things in much more nuanced fashion.
Yes, definitely. Thank you so much for that presentation. I think it was very insightful. I love the point where you liken picking a VC to being like a marriage. And I think it was very useful advice for everyone seeing this perspective. So, one of the questions we had was about the reputation of a firm, which is something you had spoken about in saying that pick a firm with a good reputation. And someone was asking, what are some of the parameters that we can consider for how to evaluate what a firm with a good reputation is? So would it maybe be the funds that it's raised, the number of granted patents, the number of awards? How do we pick a firm with a good reputation?
How do we pick, or how do founders pick a fund with a good reputation?
How do founders pick a fund with a good reputation?
So fair point. I think for us it's very important as we look at any startup, right? What is the founding team? We do our reference checks, we do blind checks. I think it's as important for any startup as they're raising, right? Of course, you have the website which will talk about the fund, but then start looking at the people who have built the firm. What does a partnership look like? What does the second layer look like? What is the kind of portfolio? What kind of founders have actually agreed to work with them? Talk to some of these founders to understand how has their experience been working with the VC firm. Look at the extended network of this partnership. What have they done in past life? What have they built? What have they curated? Right. So it's very important. Do they honor their word? Will they be there for you in the good times, bad times, and ugly times? Right. That is reputation. You don't want to. At least you want to avoid a situation where you work with a firm uh, where you get into a marriage and you get into a divorce the next day, right? You want to be in it for the long term. Going back to Ishita, your marriage point, so it's very important that you want to work with someone you really trust and you can work with for the next 10 years. It's a long, long journey.
Thank you. And if we wanted to just address the flip side of the question as well. So this is from the perspective of a startup, but if it was the other way around from the perspective of a VC, then how would that work?
So very important, right? So for us, we have a fiduciary responsibility of capital that we have taken from our limited partners. We have promised that we will use it rightfully, we'll help it multiply. If I say get a founder who's a great founder on paper, who is a great but has a history of frauds, while I know might multiply the capital, I will never put my money, right? There is no gray. It's either black or white. So hence that's how we avoid reputational risk, avoid working with founders wherever we find a red flag.
Okay, I think that makes sense. Fair enough. We had a question from someone on what if working capital is required to get a POC ready. So where would something like that be accessed from?
So if you are an invested early stage VC company, I think there is a way to leverage your equity with debt. There are a lot of funds, venture debt firms as well as traditional banks which are willing to underwrite. If you're a very early company, have just managed to raise angel money or a friends and family round, I would suggest go the grants way. Get the grants. These are absolutely risk-free capital, no returns asked. Use that to get some of these POC going.
Okay, understood.
And sometimes, in fact, I have seen NRE models where your customers basically give you the money for getting your first POC. So do experiment with those NRE models.
Okay. Are financials a must-have in the pitch deck for pre-seed? Is it premature?
Nobody's asking you to put together a fully fledged P&L or a cash flow, but there has to be basic understanding, I would say, at that stage of what are you selling, how much will you sell, how will your year one, year two, year three, year four look like? And that year one may possibly move to year three, who knows, right? But it is just to understand the basic way of if you were building this company for next 10 years, how are you building that company?
Okay, makes sense. Are there specific grants or government programs that are available for funding early stage climate tech
Yes,
startups?
you should look up Startup India website. There's lots of that put there. But there is, for example, BIRAC, CCAMP, DST, lot of these centers which are put together early stage. There is Social Alpha for early stage climate as well. So look at all of these forums where you can get access to early stage capital.
Okay. How do you decide between the right mix or the right balance of different types of financing? So something that you'd mentioned earlier was that there are a lot of options outside of equity if you're going to foundations or philanthropies. So how do you figure out what that right mix is for you?
It's very hard to figure out the right mix. It actually depends on where you are in your journey. So you might be in a place where for some reason the R&D is taking so long and it's become 1 to 3 years. That's a good point to go to grant money, saying I know this what I'm doing, but I'm just not able to get to my first proof of technology and I need to extend this runway. But there are points where instead of 1 year, you actually figured out in 5, 6 months, right? And then you know that all I need is scale capital. Then you actually can go to a VCC, look, I figured out the tech is there, this is working. I need 5 million to scale from here, right? So again, depends on where you are in journey of technology fit, product market fit to figure out what pools of capital work for you.
Okay, thank you. There are a lot of questions about Avaana also and about Avaana in relation to the Grand Challenge. So one, if you could just clarify the investment areas of Avaana, what all it's looking at, the different types of climate tech solutions that it might be exploring, and two, for startups that would be chosen through the Grand Challenge, what their relationship with Avaana might look like outside of that.
So I'll address first one. Avaana is a 100% climate fund. We invest in three sectors, contributing 90% of emissions. As like I said, energy transition is important, resource management and water is important, supply chains are important, mobility is agri-food systems. Between all six of seven other further mini subsectorize, we see everything. These can be product companies, this can be process innovation companies, but really what are they doing to move the climate needle forward? And Ishita, maybe worth outlining the 6 areas that we have put together for Grand Challenge. Do you want to take it?
Yes, definitely. So we're looking at energy transition, mobility and supply chains, sustainable food and agriculture, circular economy, resource management, water, climate finance, climate data and reporting, as well as industrial decarbonization, built environment, and carbon capture.
Yeah. So those are the, Sorry, go ahead, Ishita.
No, just saying that the link for the grand challenge is in the description of the video. So if anyone would like to see any more details about the challenge, you can click on the link and it'll take you there.
Yeah. So I think those are the areas we are investing in. Those are the areas we would like to see starters. Of course, we are super excited by already the massive inflow of applications. Some of them will emerge as potential winners from our jury, and will have some monetary benefits attached. But I think this is a great opportunity for startups also to understand how to go through this process. And also we will have various master classes like one today, where you will get opportunity to hear from various speakers on how they are looking at these spaces, and then accordingly showcase is the opportunity here for any startup.
Since we're on the topic of Avaana, someone also asked how Avaana can help in building early stage climate tech startups.
So we are going to be a partner in crime. Of course, the idea is here. We are clapping from the sidelines, but we are more than clapping from the sidelines. If you think about most of our founders, we work with very closely with them on how their business is growing, how their business model looks, what kind of funding they need, where they're going to raise next capital of funding, what do their first five customers look like, how do they get access to those customers. If they're looking to hire talent, we work closely with them on that talent hiring. So across the board, we want to be the partners in crime. We are the partners in crime. You are on the driver's seat, but we do help you in your journey.
Lovely. Founders may have different backgrounds, but within the same climate impact space, how much does that matter for your considerations? And if someone may have a carbon consulting background but want to build on hardware, how would that look?
So I think climate passion is apparently clear if someone has taken carbon and is building in a hardware space in a similar domain. What is crucial is, can you take an idea to execution? So, for example, someone who has done, say, carbon accounting software for decades has a great hardware idea. It will be good to see in the pitch deck the proof point of how they will build about that hardware, right? Maybe it's not them, maybe it's someone else. Maybe it's complementary skill set, maybe it's a partnership. I think all we want to see is, can you take that idea to execution, which is why team background becomes very crucial.
Okay, understood. Makes sense. Someone asked that since the ticket size is big for climate tech startups, how do early stage VCs look to fund?
So again, every VC has its constraints, right? I don't think I want to write any check more than 5 million. So if you're coming to raise more than 10 million, probably I'll write 5 million, you'll get 5 million from somewhere else. If you're wanting to raise 50 million, I probably cannot write that because I don't know how to work with a company which is raising 50 million at some point, right? And there are pockets of capital. There is Beyond Net Zero, there is BlackRock, there is GA, right? So you figure out which are the pools of capital which work for you, which is why very important to know when do you need to raise, how much do you need to raise, and as you do, what is the persona of the VC you want to talk to.
Understood. I think valid points raised. Policy is something that we didn't touch too much upon, but it can play a very important role. So are there any specific regulatory trends or incentives that a startup can look out for?
Yeah, I think we should. I think if you think about, and I mentioned briefly, I think the first really was solar, second was EV. But if you think the direction of travel, BRSR guidelines are here, right? So emission reporting is becoming more critical than ever. There is enough and more focus on circular economy, and hence you will see a lot of happening. Green hydrogen is becoming more crucial than ever, and there's a lot of capital being put to work there. So again, these are the areas which are traveling in the right direction, and there's a lot of startup. Again, it's like a gold rush, right? If there is a gold rush, you get the picks and shovels and you build alongside.
Got it. Understood. How can startups stay agile and adapt their fundraising strategies to any changing trends that investors might be seeing?
So I think there are 2 points, right? I think you should not think about what investors want to see. I think it has to be true to the purpose, but you have to be agile. So for instance, COVID happened, all of us learned to do Zoom pitches and Zoom funding, right? So I think it has to be agile to the macro environment. Suddenly there is a new regulation which says, again, for argument's sake, right? I don't know what it is. I don't want the direction of travel to be that way, so I don't want that to be argument. But something which is contradictory to which is helping the climate needle forward, right? maybe at that time you need to take a stock and think about whether I can build this company or switch gears. But I think it should not be what investors are looking at. It should be more from what you want to build and where you think macroeconomically things are moving.
Okay.
Macroeconomy, regulatory policy, more to be looked at versus what investors want to do. Investors may want to do food tech startup in one season and climate tech in another and D2C in another. It's about what you are building for.
Yeah, makes sense. Okay, our last question for the day is about debt and DIF funding. Is that a good idea? Just if you could share some light on debt and DIF.
So I think both are very good pools of capital. That is least less expensive form than equity, so definitely worth going. DIF, I am assuming you mean development DFI capital. So DFI capital again is in various forms, right? There is grant, there is equity, there is debt, there is teaching assistance, there is various other support. So figure out which support you're going for. Equity, I think, is all equity similar, but if there are other pools of capital you can go, which is debt and grant and TA, definitely worth exploring. I mean, no two questions about it. Equity is expensive. Try and form way to leverage that equity capital to get other forms of capital.
Okay, understood. And I think that brings us to the end of our session. Any parting insights that you'd like to share with the audience?
Thanks, Rishita. I think it's what we at Avaana say, right? We want to build the next 20, 30 large climate tech startups in next 8 to 10 years. So let's find them. Let's work in the startup ecosystem to actually build for those large outcomes. Because I always think about it. If Larry Fink says there are going to be 100 climate tech unicorns in next 10 years, there is no reason 20 of them should not be here in India. 1,200 of them should not be in India. So that is the scale of the opportunity, and startups should definitely be working to. It's a bright spot. It's definitely a bright spot.
True, very true. Thank you so much for being here with us today. Thank you for your insights. I think everyone who joined had a wonderful time, and it was great hearing about all of these things from a VC point of view and from a very structured and methodical breakdown of the process, which I think was extremely helpful. So thank you so much. Thank you to everyone who tuned in today and who was listening. I hope you've had a very enlightening session. Please apply for the challenge if you haven't already, and please look out for any other masterclasses that we will be doing for the following week. Thank
Thanks,
you, and
Rishita,
I
and
hope
I look forward to many more applications.
definitely. Bye.
Thank you. Bye.